So the business news now on the programme. Wall Street rebounding as Federal Reserve Chairman Jerome Powell vowed not to raise rates too quickly as the dollar and oil gave up earlier gains. Another record high for the Nasdaq as well, as you can see up across the board there. Asian markets inevitably, of course, also responding to that, as you can see, all positive as well. Well, let's cross then to Kuala Lumpur. We're going to speak to Han Tan, who's market analyst from FXTM. Thanks for being with us on the programme, Han. Jerome Powell then really easing fears and markets reacting to that?
Indeed, Stuart. So the Fed chair stuck to his script of patience and that higher U.S. inflation is likely to be transitory. These are things we've been hearing for months now. But despite Powell's reassurances, I think the Fed dot plot that we saw from last week's meeting tells us a different story. I mean, the fact that enough of Powell's colleagues are penciling in not just one, but two U.S. interest rate hikes by 2023 is in stark contrast to the expectations that we had coming into this year. So I think market participants are now viewing the Fed's commentary with a new lens, so to speak, given what we have learned from last week's Fed meeting.
Yeah, it's going to be interesting to see what happens next, presumably, Han, because despite those comments, the fears aren't going to go away, are they, if inflation starts to go up again?
Indeed. So if we continue to see signs of a U.S. inflation overshoot, right, I think that's going to force the market narrative that the Fed is moving closer to tapering. Now, we know that the Fed had already begun talking about the prospects of tapering at last week's meeting. And overnight, Fed Chair Powell also had to concede that the inflationary pressures that we're seeing right now could actually be more persistent than he and his colleagues expect. So, and that, of course, would go against his transitory stance, right? So I think if we do see more signs of inflation, you're right, Stuart, I think we could see markets really unwind more of that reflation bet, and that could lead to more volatility in the markets.
Han, good to talk to you as ever. Thanks very much for being with us on the programme. Han Tan there from FXTM. Now, Google is facing another antitrust probe here in Europe over its all-important online advertising business. The European Commission looking into whether the US tech giant is restricting access by third parties to user data. Sharon Gaffney reports.
Google is facing a fresh probe by EU anti-competition regulators over concerns that the tech giant is forcing out rivals in digital advertising technology.
Our investigation will focus on display advertising, where Google offers a number of services both to advertisers and publishers.
Google generated €124 billion in revenue from online ads last year. The European Commission is to look into whether the tech giant distorts competition by restricting third-party access to user data for advertising purposes, while reserving such data for its own use. Google says it will cooperate with the inquiry. In a statement, it said its advertising products were used because they're competitive and effective. Brussels has already imposed fines of more than €8 billion on Google over the past decade, following 3 separate antitrust cases for blocking rivals in online shopping and digital advertising. Separately, Europe's top court has ruled in favour of Google's YouTube on a copyright case involving content uploaded to online platforms, saying they cannot be held liable unless they fail to take speedy action to remove or block access to the content. The case is part of a wider debate about how much such platforms should do to police the posting of illegal or hateful content, an area EU regulators are targeting with tough new rules that could come into force next year.